Welcome to Trading Lounge and the US stocks for Thursday, September the 9th, and starting with Amazon here. As you may know, the count to the upside, if we can just go over that for a moment, we'd been looking at this. We had a nice, an A wave here, an A and a B and a C wave here for the B wave and down for the C wave here, but it's only left us with 3 waves to the upside with 5 structure here and a 5 structure here. So do we keep building over here? Is that the case? Or, is there another way to count this? Could we put wave 4 over? Couldn't we put wave 4 here and look at this as wave 1 here, an A and a B and a C for wave 2, then 3, 4, 5. But that's got overlapping wave structure. So there's a lot of issues with this particular count that if I have confidence in something, well, then I'll move forward on it and I'll say that. But if I don't have confidence in it, well, then we won't move forward on it, and then we need to take a different tactic. And my tactic is really just to stay with the intraday count. So the intraday count that we've been working with here, as you know, we've been looking at this particular move, counting this and trading this move all the way up here, and we exited at 3,500 and we've moved back in as well, just for a very short-term little trade. But the point being here is that we do have an impulse wave that's developing here. So if we get 5 waves here, well, then we'll get a correction and then we'll have another 5. So that's as much as I know. Now, when we do come up through here, I'm not sure if we're going to have this as a wave B here, this last 5 waves, as an A and a B and a C wave, or will we go into another 5 waves? Will we have a larger impulse of 1, 2, 3, 4, and 5? So these are things that we need to sort of figure out. The point that sort of haunts me a little bit here is that if we're going to go from here with 1, 2, 3, 4, 5 up here, well, I don't see other stocks going that high. I see some of them topping out pretty shortly, so into their wave 3s, and this is something else that I need to put forward in a reasonably firm way, is that there are stocks that are approaching their 3rd waves that are quite close to it. So pulling back to this wave 4 here is on the cards for, not only the stocks, because obviously the indices are created from the stock as well, in a balanced, weighted way, I'd imagine, depending on how the S&P have set that up. But just to start waving a little flag on this wave 3. But Amazon seems to be in a little field of its own, unless we're, I don't know. Anyway, let's just go to the tick chart in this case, and let's just take a look at what we've been doing. So from the low, it's pretty clean and clear, this count. There's no sort of issues with it. We've got 1, 2, 3, 4, 5 for 1 and 2, and then we've counted 1, 2, 3, 4, 5 for wave 3 here. This is our 50-60% target area. We know 5 is the second strongest number. We knew that we'd have some sort of larger correction here. It did appear that we had a 3-wave move here, so that means that we could go long again here and here. So if that's the case, so if this is wave 1, 2, 3, 4 here, I mean, first of all, is it possible that we can put wave 5 on this top here and be done with it? Yeah, I think there's a case for that, but the move down from the top here doesn't appear to be in 5 waves. It appears to be in 3 waves, so I've labelled it an impulse wave to the upside as 1 and 2 and 3, 4, 5, and that would also give it, because wave 3's got the extension in it, it's the longest wave, so as a rule of thumb, wave 1 and wave 5 will be roughly the same size. So coming up to the lower end of group 2, which is the 65 number, as I call it, 72 and 80 here, I think we can go up to this point, anywhere between 3,600 and 3,650. So it will be nice when this top gets taken out here. Once that stop gets taken out, then you can move the stop up. But this move here is in 3 waves, so this looks a little bit impulsive here for this, so a bit of a move like that. But as soon as these tops get taken out here, then you can bring your stop up into this point here. So I won't put it there just yet because it hasn't taken the top out, because it might just come down here, and because its retracement level is in this space there, so we just need to be a little bit careful. We don't want to do something silly, so it can come to here before moving off. Okay, so just be aware of that. I'm just going to clean that up, but yeah, I mean, it's looking really quite good, you know, in terms of everything, and it's looking like it's more, you know, normally we'd look at the pattern being like this, the classic trading levels pattern, like the arrival, the reaction, first high above, and then pulling down through here. But we're not really pulling down. We're sitting on the top here. So we're really looking at the first variation of that pattern of this one here. So yeah, anyway, looking good. So let's move on to the next stock, and just going to put this up here so I can just put it in the right place. So Google's the next stop, Alphabet rather. So with this market, just because I'm looking for a top, when you're looking for tops in the whole market, so to speak, and this is what we're looking for, a third wave top here, as I mentioned, we're not, you know, once some of them start turning, then you know, the smaller ones can be pulled around and this and that, and it never really finishes off the way that you'd like it. In saying that, we'd probably have now perfect tops all the way around, but I just want to explore different things. So we've got wave 4 here. Well, from this wave 4 here, we've got 1, 2, 3, 4, 5 for 1 and 2, and then we've got 1, 2, 3, 4, 5 for 1 and 2, 1 and, let me just double check that. 1 and 2. And then 1, 2, 3, 4, 5. Okay, so 1 and 2 in here, 3, 4, 5 for that. So if we put wave 4 here, just for instance, that means the move up here, which is in 5 waves, we could have a top in play there. But I've got wave 4 sitting. We've always had wave 4 sitting over here, so that means it would be 1 and 2 and 3 and 4 and 5. So these are the types of things that we need to double check coming close to the top. This is a daily chart, of course, and we'll go to the tick chart. Not that the tick chart looks much different in this case, but so yeah, we've been in and out of this market. We've got a position here, and this little area through here. So first of all, we've got minor group 2, 65, 72 and 80, so that's all cool. And then the next level here is the 30, so that's the top of group 1, of subgroup 1 of minor level 8 here. So that's also the wave 4 of 1 lesser degree. I've just moved that out of the way there. And it's also the 38.2% retracement level. So it's possible, if I take it from this top here, then we've got 1, 2, 3, 4, 5 here, so an ABC here. So it is possible for this market to move lower before it moves higher. But if we do have a top in here, as I mentioned before, if we put this wave 4 over here, then we've got a top in here. So we need to be, you know, this is why I'm just double checking everything. So we're going to move the stop to 28.12. Because stops, long trade stops, would normally end in a 2 or a 6. So I've got this one at a 2, which is below the 15, because normally when we'd be looking at the minor level 8 here, then we put in, let me just get this together for us. So we've got group 1 here, subgroup 1, okay, so that's 1, 2 and 3, and then we've got 5, and then we've got 8 here. With 8, we've also got group 2 in here as well, okay? Not worried about those. What we're looking for, what I understand is that if a market's been above group 1, above the 30, and then it comes back down and it can spike down to 1.5, which is quite common. So that'll be 28.15. So, but if the number 2 here becomes the resistance, then I know that the market's going to be pulled down to the closest largest number, which is this one here. So that's why between I've between 10 and 20. I've got a choice to put the stop above the 15, above the 5. The 5 is the second strongest number. Above that at 6, or I can go below the 15. And I don't want to put it at 14 in case I get spiked out, and then I've got 3, so it's got to go at 2. So that's why I've put it in there, because if that becomes the resistance here, the number 2 here is giving it enough time to become the resistance, and it would be a very clear proposition at that point that would be pulling back to the 2800 at that point. Now also with this top here, it's also possible to put wave 5 just here and have this as an expanded flat, as an A and a B and a C. It's a bit elongated, this particular move here, and I don't have a nice 5-wave structure up here for this either, so that's why I've organized it like that. I will just leave that, but I'll just give a bit of definition to that 2800 there so we can separate it from group 1 there, because we may need to go back in there a little bit further. Okay, so we're still on track for our target up here, but what we'll also be doing, we may need to adjust that, because once we do have wave 4 in here, we're just going to be counting 5 waves up through this point. Once we got to 5 waves, then I'll mention that we need to leave at that point. Okay, so let's move along. This is Apple here. So with Apple, yeah, we're getting some sort of classic trading levels pattern here, the arrival, the reaction, and we're in that first high above the level. It's not a very nice clean count in all of this, and once again we could also have a top in play here as well. If I take it from this low as 1 and 2 here, and 3 and 4 and 5, which we'll need to have a bit of a look at. But because this is a little bit unclear in here, we could end up having a 1 and 2 in here, and then all this is just the third wave, and we have a 4th and a 5th. So that's what we're going to talk about here today as well. On the tick chart, a little bit messy in here. So I try not to be bullish or bearish. I just try to gather the evidence and weigh the facts, and then use tactics to be long or short. In this case, we've had wave 4 here with 1 and 2 here, and then counting up here, it's a little bit weird. And then here I can count 5 waves to this point. Now I can count 5 waves coming down through here as well as 1 and 2 and 3 and 4 and 5. So we can just have, well, there's a couple of things that can unfold here, but on the upside here, this would be the 50-60% retracement level, which is in line with this consolidation, which would be the volume over here. So that would mirror that. So that's probably where it'll sort of come back down to. So, but what I'm thinking here is that we can come down from A, B and C down to this wave 4 back onto 153, top of minor group 1 of this, and then push up again from that point. But I don't know that at this point. I've taken the most conservative count. As I've mentioned, if I've made a mistake, we'd look at this as 1 and 2 here and 3 to here, and this wave 4 coming back into the wave 4 of 1 lesser degree, and the 38.2% retracement level both meet up very close to the top of subgroup minor group 1 there. So this is what I mean. If this has got a top in place, well, Apple's, one of the big fish in the top 10. So, it can start moving things around a little bit. So we'll just keep an eye on this. Okay. We'll see how this plays out. But yeah, look, I think the takeaway today is that we're very close in one way or another to this top here across all markets. The world is connected, and yeah, so there'll be a few markets that do their own thing, like India and so on, but still India is pretty close to this top here too, by the way. Okay, square. So we've been triggered in short here. We've been looking at this as the A wave, the wave 3, ABC for wave 4, and counting 5 waves up here. It hasn't been the best 5, but it's the best fit. So there are a couple of little issues with it that I won't go over just yet. The point being here, if we do have wave 3 top in here, then a couple of things could be possible. On the bullish side, we could look at this 5-wave structure here as wave 1, and then an A and a B and a C back here for wave 2 in the box, and then push up from that point. But at the same time as well, when we're going into wave 4s, I also want to say too, going into wave 4s is a bit of a nightmare. All right, so there's a couple of things that we can do. There's about 12 patterns in Elliott, and they can all pretty much play out in wave 4s, and they can double in size, they can do all sorts of things. We know basically where they'll come back to, but how they play out, there could be triangles, double zigzags, maybe simple flats, regular flats, and yada yada yada, and even triangles. There's probably 6 different types of those as well. So this is going to be a nightmare, and I will be, when we move from, in the general markets, when we move from wave 3 to wave 4, have a bit of empathy for me, because it's going to be a lot of discussions about different counts, unfortunately. Some will be clear, some won't be clear. I'll do my best to make that. But what I want to say is we've had a pretty good run up trading over the last months or whatever. So now you need to break your habits and half your betting size or all of those sorts of things, and you need to we need to start putting our bear cap on as well. So we'll be looking for some trade setups, and this is the first one that's really been triggered. So yeah, we need to think, it's like driving from the UK on the right hand side of the road to going across the channel to drive to Europe to drive on the other side of the road. You really need to stop and take stock of the change in environment, so to speak, and that's what we'll be going through. So, change your habits, trade less, all of those sorts of things until you're in the swing of it and feel comfortable, and then you can rebuild. Because what people tend to do, the money they make in trends is they give back in the corrections. So, wave A, for instance, that can be in 5 waves or it can be in 3 waves. So in this instance here, I've just got it as wave A, B, and C here. But now one of the first things we need to do is just let you know that that could be wave 1, and that would give us 5 waves. I've got it in 3 waves here because I think the fingerprint for this particular market, when we had this move down through here, if you remember, we counted 1, 2, 3, 4, 5 here. So we had the A wave here in 5 waves. So then we had the B wave, and then we had the C wave, and with this going so high up here, we could label that wave A. So we definitely knew we had a 5-3-5 structure. We had a 3-wave move here, so that told us that we could be in a triangle, a flat, all of those sorts of things. But it told us once that first leg had come down, we knew that we were bullish corrective. We knew that it was a bullish corrective pattern, and that we'd be taking that high out. We didn't take it out by much, but like I said, we may just be up here for wave 1 and coming back for wave 2. We don't know that yet. So these are the sorts of things that we need to put on the table. We need to put all the counts on the table, and then we need to eliminate them one by one. That's all we can do. As a trader, we put our trader hat on and we can start trading. So we've dropped out of group 2 here with a nice little short trade set up here, and the market's dropped down into the medium level here at 250. So it's going to stall there. It's going to be like a ball bouncing on the ground for a while until it can eventually find its way through. So on the tick chart, this video is a little bit longer because I need to talk about other things. As you know, we counted up here. I've just rearranged the labeling here. Same labeling, just different, same count, different labeling. But wave A, B, and C. I've just lifted it up 1 degree of structure. It could also be wave 2 here. This could also be wave 1 here. We'll just see how it travels. So we were looking for a, let's just go to the bearish patterns while we're here. So this is the classic trading levels pattern 1 to the downside, where, no, that's not it. Marcia's got that a little bit mixed up. So graphic design error, that one. No, she's got 2 the same here. Okay, anyway, I'll get that fixed. So let me just go back. I don't know why it does that. First of all, the market came down and bounced off it and went through, and then it came down, and we had this first entry here, and because we have to wait for the first low below the level, and that becomes our entry point. We can wait for the second one, and that becomes our entry point. So this one's finished off nice and squarely here, so this should come back up above the level. It can, most of the time it will come back up above the level, which it has done here. So we've come down, we've bounced, we've gone up, we've come through here, and then we had this sitting over here for that. Okay, then we could lift it up to under this one here, but it never basically came back through. It's gone back up, so then we go through the same process again and we could have gone in here, but I've just put it there for the time being. But it's gone back above the level. It didn't sit under there squarely for that. So yeah, so that's our pretty much our first one to the downside at the, lately. So we'll just see how that goes. So I've labeled it at wave 1 here and 2 here, and then 1 and 2 here, and 5 waves down through here. I may need to put wave 4 here. I'll need to just go back over this little move in through here. I haven't spent much time on it, but either way, we'll be looking for, this is the ball bouncing at the moment, so to speak, on that level. So we can look for a 38.2% retracement level basically here, and then moving down lower. So we're going to see this pattern here across the 250 here. Well, it won't kind of be this pattern. It will probably come. It probably will come back up above the level and then come back down. So anyway, I'll get my pictures sorted out. So yeah, look, we're on our way at this point, and we'll just leave the stop above wave 2, or you can bring it down to break even at that point. That would be fine. In fact, let's just do that now. Let's just, we don't really want to move it until, there's no need to move it just yet. We can just put it, I mean, it originally would have been here and here and now here. That's the go. So, but we'll move the stop when this 250 becomes the resistance at that point. If you want to take money off the table, that's fine, just depending on what you want to do. Okay, so Facebook. So just picking it up from this wave 4 here, we've been looking at this as wave 1 here and ABC for wave 2 here. It came really quite low back here, so that is a little bit of a concern. And then we've been looking for wave 3 here, and then wave 4 and wave 5. Once again, there is a case that you could put forward where wave 4 would sit here as an A wave, a B wave, and a C wave here for that. If that's the case, then we've got a top in here. Then we're finished here. Let's just go to the tick chart, see if I can glean some. Just bear with me a second. Let's just get a bit more. So we've been looking at this as wave 4 here, and then wave 1 here with an A and a B and a C wave down here for wave 2. But as I've mentioned, it's come really quite low. It hasn't breached this one over here, so it's okay. But we could use wave 4 here, and if that's the case, then there's a good case that we could have a top in here. So this wave 5 would come over here for this. I'll be a bit more optimistic, but just to let you know that. From this low to this high here, this wave 4 here, that little line there, that's the 38.2%. We're in minor group 2 here. So if the 72 here, 372 becomes the retested resistance, and that would be market coming down, bouncing, going through, coming back, and then breaking that low, then you want to be short at that point, and you want to be out of any long positions at that point. Okay, the 38.2% retracement level is here. This move down through here, we can look at it as the A wave, and I think it's actually in 3 waves, so I think that we're okay. And then we've got an A, B, C here for the B wave, and then we've come down for the C wave here, and it does appear that we're moving up at this point, so we'll be looking for further upside here in this. If this top gets taken out, you can be long at that point, but how far do we go? Will we get to 400? These are the questions. All we can do is follow the 5-wave structure to the upside, and then count the last 5 in that, so we'll be able to get it pretty close. But once again, we just need to be a little bit careful. Let me just double check this. It seems okay as an A and a B and a C to this point, and then an A and a B and a C to here. This will, if it was going to be bearish from here, we can just take that distance. If it's going to be bearish, it's going to fail at that point. That's the 61.8%. So if you're going to go long here, by the way, you would look for a classic trading levels pattern here on this level. So if this was going to fail, it would be something like this here, and then take out that low. It does appear that we've got 1, 2, 3, 4, 5 here already, so I think that low's in place. So any stops can go at this point just below here. I think that if you want to get a bit closer, which I think we'll do, let's just put in a stop there, shall we? We want to play a pretty tight game from here on in with everything. Okay, that's Facebook. So we're just being really cautious about everything now, okay? So with Tesla here, as you know, we've been looking for wave 3 up here. It's in its own world, but as an A wave here, we can never forget that we've got 5 waves here. So that means it needs to play out. Another 5 needs to play out, you know, over here, I guess. So this is not 5 waves here. This is 3 waves. So the A wave here, the A, the B, and a drawn out C wave here for the B wave, and down for the C wave. The 61.8% retracement level is the 50% here, and the 61.8% up here. So that was our sort of target, reaching the top there. So we have reached the top there. I've had a position in this. I've moved out, as I mentioned, and there's still possibility for further upside. It's just now that you need to be cautious. So the levels to the upside is the the 750, the 50, the number 5, we always call that the midpoint. It's halfway between obviously 700 and 800. And then we got minor group 2 here, 65, 72 and 80. So that's also going to slow the market down. We can see that it hit the 65 and dropped back at that point. So any sort of further upside here, we're just sort of splitting hairs in terms of if I've got all of this wrong, well then we would just simply need to see, you know, a classic trading levels pattern sitting at this level at the 800, and this is where we would go long from over there. We could get a better entry, but we would need that pattern for us to be long at that point, okay? So yeah, if we're wrong, that's what we'll do at that point. But otherwise, you know, once that tops, we'll be looking for that, the mirroring of that 5-wave structure over here back into 500. On the tick chart, we're counting 5 waves from wave 4 here up to wave 5. So let's go check that out. So that's our wave 4 here, and then we've had wave 1 and 2 here, and then we're going 5 waves up here, 3, 4, 5 for wave 3. We're looking for wave 4, and then going up for wave 5. Now, we don't have a really good wave 4 here. In fact, we could look at all of this as wave 1 here, or even wave 1 to this point and back here again. So it's looking a little bit more bullish than I expected, you know. But that's okay. At least we, you know, as it happens, we can see and, you know, we can build a case for things. So just being very conservative, and I could be quite easily wrong here, is that we're looking for this top here. So if we just consider this an ABC here for the moment for wave 4, then we're looking for 1, 2, 3, 4, 5 up here. So that will take us up into group 2. So far we've got support, well, trying to gain support on the midpoint here. We've got this pattern here. And coming into group 2 here, we've got the 65 here where it failed. So that's where we'll see another little, you know, little dance here, but we should go through this time if we get there. And yeah, and this here looks like the first little impulse wave to the upside here. It does look impulsive. So we've got wave 1 here and 2 here. 1, 2, 3, 4, 5 for the third wave. I don't know if that's the ABC for the fourth wave there. We've either got that top there as 1 and 2 there, or we're going to put wave 2 over here, and we need a little more. We need this as 1, 2, 3, 4, 5 up here, and then pull back. So there's a couple of little dudes there, but we will tune into that a bit more. So that can come up to there, and we'll probably come back to that point and then move off. But just look for the 61 point. If it does start to drop here, look for the 61.8%. It probably come in at this level here. Yeah, that's the 61.8% there. So there's going to be a bit of a struggle there at that point. Just checking. That looks like 5 waves. So yeah, we'll go with the A, the B, and 1, 2. There's 1, 2, 3, 4, 5. Oh no, yeah, that's right. Yeah, that's cool. 1 and 2 here, and 3 and 4 and 5. So that's all done and dusted. So yeah, if you're going to put a stop in here now, we can just put it. This would be if that's the 61.8% from that high, then we can put the stop in through here. So instead of putting it at 4.4, it can go at 7.42. But do not all these markets. This is the last chart, but trading the last bit of the uptrend here, if that is the case, trade less and play a much tighter game. We don't want to be caught out. You know, it could be something like what happened to Bitcoin. Now, Bitcoin has rolled over. It's taken sort of gold with it as well. There could be a change in the currency move from that point, which can sort of still come back into the flow of equities and so on. So yeah, just be careful of the bigger picture. And you know, we're coming to a top, and like I keep saying, that it doesn't always top the way that we think that it will, and it could catch you out. Like, you could have positions over this Friday on the long positions, and then Monday opens up, you know, quite deeply down. Because one of the other points too that I think is worth mentioning, I think we can see it in. Let's just go to squares, just as an example. I mean, and I'm just going to a sort of not a, you know, an example that will sort of freak us out or anything, but going to just a very medium case. So what normally happens is that when a market's going up, it's normally the A wave that's the sharp one here, right? Because it catches everybody out, it stops and all those sorts of things. And then, you know, then the B wave comes in, it tries to rally like Bitcoin's doing now. But because we get 5 waves here, the rally's going to peter out and then it's going to come down. Now, when it comes down, if it's going to be a C wave, it's going to be on more of an angle, but if it's going to be a third wave, it's going to be on much the same angle as the wave A. So this move here, the personality of it, can help us out. But my main point here is that A wave happens really quick and you're just not ready for it. So when we look at this correction here, the A wave here, the B wave here, the C wave here, we can kind of see it came down here and then it looks like it's going back up, so everything's okay. So you hold long on the Friday and then like Monday and Tuesday it catches you out like that. So we're close to tops, so just be, maybe I've got it wrong, but we're getting closer and closer. So I just want to, make sure people aren't asleep at the wheel, so to speak. Alrighty, sorry for the long video, but just wanted to, draw attention to tops. Okay, cheers.